Now, as the inflation, ladies and gents, has been increasing for the past 2 months, this is something that just means that obviously the cost of living continues surging. I mean, in South Africa right now, inflation is currently sitting at 7.1%, meaning that, ladies and gents, things are expensive, or things continue to be expensive, and this is bad because in the US, or in places like the US, we've been seeing inflation coming down sharply, which is something that obviously makes or will result in the Federal Reserve in the US to maybe consider halting increasing, of course, interest rates maybe now in June. Whereas here in South Africa, it's a different story. Interest rates are expected, or are still expected, to surge due to this high inflation, because like I said, the past 2 months we saw inflation surging or rising instead of it dropping. Now in SA, you will know that, of course, the central bank is targeting an inflation of between 3 and 6%, and looking at the fact that right now inflation in South Africa is still sitting at 7.1%, it just means that we are still very far from the bracket of between 3 and 6%, which is our target. Now these surging, or these high increases in inflation result in, like I say, central banks increasing interest rates, trying to curb this inflation. Now, talking about interest rates in South Africa, you will know that the last time the central bank or the Reserve Bank sat down on an interest rate decision meeting, they increased it by 50 basis points, or 0.5%. Because with that, it means that those that have loans that are tied to interest rates or current interest rates, their repayments is becoming more and more, or their repayments on the loans, it is increasing, which is something that is obviously not good, because it means that we end up not affording some of the loans that we have. And on the other hand, besides the high interest rates that is making us not to afford some of the loans we have got high inflation. Things are just so expensive. I mean, last week we saw retail sales declining, which is something that must just show you that consumers are not affording the things that they used to afford, because things are just so expensive, guys, which is why we saw a figure like the retail sales in South Africa last week dropping, which is something that obviously that shows you that there are so many things that their prices have went so high that, ladies and gents, consumers can't afford anymore. Now with that, this week we are expected to see the CPI figures, or the inflation figures, coming out on Wednesday, and as seen on the screen, you'll notice that analysts are expecting inflation to come at 7%, which if it comes to 7% or below 7%, it will be a good thing, because like I said, 3 months ago our inflation was at 6.9%, but in the past 2 months we saw, of course, inflation coming back up at 7.1%. 2 months ago we saw it rising to 7%. Last month we saw it rising to 7.1%. So this month analysts are expecting at least inflation to drop to 7% from that 7.1%, which, like I said, if we get to see this, then maybe it's not that bad. But if we get to see it coming below this figure, that is 6.9, then it is good. Then obviously chances are, when the interest rate decision, or when the Reserve Bank decides on interest rate on Thursday, then we are going to get them maybe to become a bit more lenient, and not maybe be that aggressive or during that interest rate decision. So I'm hoping for the best, because Wednesday it's inflation numbers, which will obviously have an impact, or have an impact when it comes to the Reserve Bank deciding on Thursday about the kind of rate hikes they will impose on the Thursday meeting. So I'm hoping for the best, and I hope that inflation, ladies and gents, on Wednesday it drops below 7%, as that will mean, or that will result maybe in the Reserve Bank not to be aggressive when they, of course, raise interest rates on Thursday. Now, before we forget that, also you already know that this video is just an entertainment video and not a professional financial advice video. Now, I really appreciate if you just hit the likes button if you are enjoying the content that I'm giving you about the inflation and interest rate hike of course, events that are set to take place this week. CPI, or cost of living, is coming on Wednesday. Interest rates decision is coming on Thursday, which obviously these are some of the most important things that even if you're not an investor investing in stocks, but as a consumer, you need to obviously closely monitor, because if inflation continue going up, it is going to result in the, of course, Reserve Bank increasing interest rates, which even if you're not investing in stock, it has a huge impact, because those credit card loans you have, those home loans you have, those car loans you have might be impacted by you maybe getting to see even a higher repayment if you did not take a fixed loan. And this is something about fixed loan. I realize that it's not many people that have taken fixed interest rates on their loans, which is something that obviously makes it even more painful to see, of course, your repayments or the repayments in our loans rising or increasing due to the, of course, increase in interest rates. So if you're enjoying this content, give it a thumbs up, as it also helps with YouTube's algorithm. So without wasting more of your time, on Thursday, like I said, we are expected, or we are set to see an interest rate decision coming from the Reserve Bank. And analysts are seeing on the screen are expecting an increase in interest rates of about 0.25%. So they're expecting interest rates to increase by 25 basis point or 0.25%. And this, again, if it happens like this, then it means that obviously we are going to see, of course, the loans or the repayments on the loans continue to increase. And this will be the case if, obviously, our chances are high that it will be the case if inflation comes at 7% as expected by analysts. They still expect, obviously, inflation or interest rate hikes rather to increase by 0.25%. So if we get inflation coming at, or CPI figures coming at 7% on Wednesday, then we might see a 25 basis point increase, of course, in interest rates on Thursday. Whereas if we see it coming out higher than this, then chances are very high that we might get to see another 50 basis point or a 0.5% increase like what we saw the last time. So all these interest rate hikes, all this inflation, it is not good to not only consumers but to businesses also, because like I said, retail sales last week dropped. I think it was by 1.6%. I can't remember exact figure, but it dropped yet again, which means that the demand that the retailers used to see maybe a year ago, it continues dropping due to high inflation and interest rate hikes, which is something that is impacting, like I said, not only consumers but even the companies that we are investing in the stock market. This is something that makes me to want to discuss about this issue, because it has a huge impact into companies that are listed also in the Johannesburg Stock Exchange, because some of the services, products and services they offer, they get to not be in demand like what they were seeing a year or two ago, which is why we are seeing retail sales dropping, which is why it is something that obviously it's not good. So the moment we see, of course, inflation getting to the 3 to 6% bracket, which the Reserve Bank or SA Reserve Bank is targeting, is the moment we are going to see, of course, maybe the Reserve Bank now starting to think about decreasing or reducing interest rates, which will be good news to not only consumers but to also the very same companies we invest in, because those companies that maybe have to take loans to grow their businesses, they have to take loans at a higher, of course, interest rate, which is something that obviously means that the repayment becomes more, which obviously it's not good to, of course, the companies we invest in. So this week, ladies and gents, these are some of the important events that I'll be closely monitoring, as they are very important not just to consumers and businesses but to investors. It is very important that you closely monitor, especially the Thursday interest rates decision, because that, ladies and gents, an increase will be more or will bring more hurt to obviously the investors, the consumers, the companies who invest in, which is something that obviously won't be that good. So in South Africa, we are at that point where, yeah, we really need to obviously catch up and continue increasing interest rates, because countries like the US, we have been seeing them, though this CPI or cost of living has been dropping. I mean, recently it dropped below 5%. They never stopped increasing interest rates, strengthening their, of course, policies, which is something that obviously we are also expect, or South Africa is also expected to do the same, and that is to increase interest rates to make sure that obviously they bring inflation down. We bring, of course, the cost of living down. Otherwise, with all that, guys, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit the like button, comment, and subscribe. And once you subscribe, don't forget to hit or click that notification bell so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.